Hi guys, Kobus Kühn here. I'm a certified financial planner and today we compare business entities. We take a look at all the pros and cons and see which one is best suited for you to run your business. Enjoy! Let us start with the sole proprietor. A sole proprietor is the simplest way for you to run a business. The business is owned by one person in his or her own name. All you need to do is acquire the necessary permits and licenses, which will of course depend on the type of business you do. You'll have to register for normal tax at SARS and file one tax return, which takes into account the business and your personal income. There's no need to file a separate return as you and the business are one and the same thing. You'll of course have to register for VAT if your turnover is more than 1 million rand. The business is not a separate legal entity, which means all the business assets and your personal assets are one and the same thing. Any claim that might arise against the business will have to be settled by you, the sole proprietor. The sole proprietor is a provisional taxpayer, which basically means that you'll pay tax twice per year. If you need more info on this, be sure to check my previous video on this. I'll link to it in the description below. There's no benefit of perpetual succession. In other words, when you pass away, the business too will cease. Let us look at a partnership. A partnership is an agreement where at least two parties enter in, where each of the parties agree to contribute towards the business. The contribution can be anything from money to labor to skills, but the main objective should still be to make a profit. For a partnership to be effective, there has to be an agreement. The agreement doesn't necessarily have to be in writing, but a written agreement is obviously preferred to avoid uncertainties and any disputes in the future. You might have heard about a joint venture or a JV, which is in essence a partnership. It usually just refers to a once-off project or a single business venture. There's no benefit of perpetual succession, which means that should any of the partners leave or change or even pass away, the partnership will cease. A partnership is not a juristic person, which means that the partners can be held personally liable. However, each partner's contribution will go towards the partnership estate, which is separate from each partner's personal estate. It is owned jointly by the partners, undividedly in accordance with the partnership agreement. Should any claim arise from creditors, it will firstly be compensated from the partnership estate. And if this is unable, the partners will be held liable in their own personal capacity. A company and a close corporation are very similar in many ways, but there are some differences. So firstly, no new close corporation can be formed since 1 May 2011. Existing ones can still operate. Here are some of the key differences. With a close corporation, you own membership, and with a company, you own shares. A close corporation is limited to 10 members, unlike a company where there is no limit to the amount of shareholders it can have. Only a natural person can be a member of a close corporation. However, a company can be owned by a natural person, a trust, or a close corporation, allowing for more flexibility. Both will enjoy perpetual succession, which means should any of the business owners pass away or sell their interest in the business will not stop to operate. Both will pay 28% income tax and 20% dividends withholding tax. Capital gains tax is also the same on both. Both are separate juristic persons and will enjoy limited liability, which means there is a separation between the assets and liabilities of the company and those of its owners. Members of a close corporation can be held personally liable for the debts of the close corporation in certain circumstances, which is not the case with shareholders in similar circumstances. Directors of a company, however, can be held personally liable in certain circumstances. Both directors and shareholders, as well as members, can be held personally liable if they sign suretyship for the business. A court can pierce the so-called corporate veil, which is in essence a separation between the business and the individual. This can be done in certain circumstances such as fraud, dishonesty, and improper conduct. You do of course have several different types of companies, such as a public company, a private company, a state-owned company, and a personal liability company. A personal liability company, or an Inc. as sometimes referred to, are mainly used by professionals such as attorneys, doctors, etc., who wish to enjoy the benefits that a company might offer, such as perpetual succession and certain tax benefits. All the current and past directors are jointly and severally liable for any debts or liabilities incurred during their time of office. The document that sets out all the rights, duties and responsibilities of all the various stakeholders in a company is called the Memorandum of Incorporation. Now, there are certain default rules, as well as some specific requirements that have to be included in this document, which is set out in the Companies Act. A closed corporation does not have a memorandum of incorporation, but they can set up an association agreement. An association agreement is not compulsory, but if it's not in place, certain rules will automatically apply, such as every member shall be entitled to participate in the carrying on of the business, which means any member can enter into a legal contract or incur debt on behalf of the company. Even if such an agreement is in place, an outsider may not be aware of this, so there is still the risk. To simplify things, I made a comparison highlighting all the pros and cons of each of these entities. Be sure to check that out in the description below. If you require more info or would like us to conduct a full financial plan for you, be sure to give us a call and set up a meeting. While there are certainly pros and cons for each of these entities, you should carefully consider which one is best suited for you. I hope that you enjoyed this video, and if so, smash that like button, share it and subscribe. Otherwise, I'll see you next week.
Thank you!